Hello and welcome. According to the trading chart, the European currency recouped its losses incurred during the Asian session but failed to continue its bullish run. Although market volatility remained relatively high, yesterday's macroeconomic calendar included Italy's trade balance as well as the European Central Bank's economic bulletin. However, these reports did not have a severe impact on investor sentiment. The focus of market participants was shifted to U.S. jobless claims. The number of Americans filing new claims for unemployment benefits slightly increased but remained within acceptable limits. However, the news did not fuel trading activity. Likewise, the speech of St. Louis Fed President James Bullard went unnoticed. The British currency continued its bullish run in the first half of the day. The price almost reached the monthly high as expected. Today, traders may take notice of data on British retail sales. If the indicator exceeds analyst forecast, the pound sterling will most likely gain value. Strong retail sales will add to inflationary pressures in the economy, thus forcing the Bank of England to take more decisive action. This is a positive signal for pound buyers. Besides, today's statistics include data on French consumer prices, as well as the Eurozone's current account and consumer confidence. If the consumer confidence index increases, it will support the euro. The United States will report data on existing home sales, but this news will hardly influence the dynamics of the quotes. Furthermore, a number of Fed and ECB members are set to speak today. Since market volatility is expected to remain subdued, the euro-dollar pair is likely to continue drifting within a sideways range. In case of upbeat data from the euro area, the euro will have every chance of recovering. Today, I think it's worth focusing on 1.1374. If the price consolidates about this level, the volume of long position will increase and the euro will approach the 1.1414 mark. At this level, it will be possible to open short positions amid a false breakout with a view to returning to 1.1374. Alternatively, short positions can be considered on a rebound at 1.1452. In this case, one can count on an intraday correction of 20-25 pips. If the price forms a false breakout at 1.1374 and returns below this level, a sell signal will be created. In this scenario, the European currency will slide to the area of 1.1328. Long positions at this mark can be considered only amid a false breakout. Purchases on a rebound can be opened at 1.1283 with a view to catching an intraday correction of 15-20 pips. Speaking of the British pound, I recommend focusing on the level of 1.3618. If the price consolidates about this mark amid upbeat statistics on retail sales, a strong buy signal will push the pound sterling to 1.3656 and 1.3694. At this level of 1.3694, it will be possible to go short on the rebound, hoping for an intraday correction of 15-20 pips. Short positions can be 1.3656 can be considered only after a false breakout, even though it will be a new February high. In this case, traders will be able to open long positions, counting on an intraday correction to the area of 1.3625 if bears are able to protect 1.3618 and data on retail sales turns out to be downbeat, short interest will rise. Thus, the levels of 1.3588 can be seen as the first target. If buyers' activity remains low at this mark, the pound sterling will most likely continue its downward movement, failing to 1.3557. At this level, I recommend locking in profits and buying the pair on the rebound with a view to catching an intraday correction of 15-20 pips. Good luck and have a nice weekend.